The consumer price side coming in higher than expected, but those producer prices somewhat softer than had been forecast. And that obviously playing into what we can expect from the Fed. Let's get into it. Lucas Santos joining us from ACY. Luca, good to catch up with you again.
Good morning.
With inflation being the word again that investors are watching as we try to determine the move in interest rates from various central banks across the globe, with the ECB remaining on hold as was expected, although did flagging perhaps that it's going to cut as soon as June. A different story playing out in the States, with markets pushing out the likelihood of those rate cuts to the end of the year, perhaps not at all this year.
Yeah. Well, good morning, everyone. Good to be here back. Very, very crazy market, I would say. Okay, we did have the inflation coming in at 3.5% just this week for the CPI year over year from USA. Expected was 3.4, so 0.1% higher than expected, but it still had made a huge move on the currency of USA, US dollar. The US dollar index all the way down from 104 all the way up to 105, 300 if I'm not wrong. So reaching these 1,000 points in 1 hour. So it was very, very crazy. Right as the inflation came out, we did had a huge backwards from the market, expecting from the Fed to not cut anymore in June, as you just mentioned. So if you remember, 2 weeks ago, we had 60 to 70% on that band of the market expecting a cut from the Fed, right? Indeed, now only 20% of the market expecting a cut on June. So the market looks to these data and think like, okay, so the probability of the rate on June, it's nearly close to 10, close to 5, close to 0. So we're not going to have another cut. Where are the cut on March that everyone was expecting? Where are the cut on June now that everyone was expecting? And July and October. So in my opinion, probably one cut they will do, most probably one cut they will do. But if we talk about if inflation is under control, I don't think so. Inflation is out of control on US at the moment. And it's driving US dollar pretty bullish.
Yet, take a look at what we're seeing on the equity market at the moment.
Yes.
Look, okay, we had a bit of a sell-off off the back of those CPI number.
Yes, of course.
But on the whole, investors still fairly buoyant. Is that justified, do you think?
Yeah, it is, because of the CPI, right? Higher inflations tends to have higher equity prices. And pullbacks are fine. Everyone have pullbacks. I did receive a question from Reuters this morning about gold. What do you think about this pullback on gold? I mean, it was just $5. It was just $5. Can't you see the whole move that gold have been making already from the past month?
Well, in fact, it was up again overnight.
Exactly.
Obviously, it fell off the back of CPI, but then we had the producer price index, which was lower than expected.
Exactly.
So what's your base case then for gold, given the strength that we've seen recently, and what do you see as driving that momentum in gold at the moment?
Purely CPI, the war, as well as uncertainty from what the Jerome Powell is saying. He stated one of, I think it was this week on Tuesday, I can't remember the date exactly, but he stated that inflation is under control. And I've wrote a blog on that. It was kind of funny. He's saying inflation is under control, and then you put the chart just down below that inflation on the past 4 months have been up. So inflation is not under control. If it was, then it would be going down and not up, right? But anyways, so on gold trajectory right now, most probably we will continue this to see higher moves, right? We just had a new higher of all time today on 2,380. I'm expecting gold to reach 2,500 in the next 2 months. When investors see what is actually happening, because even central banks are buying gold, right? Why would you be out of this party, right? It's the biggest party of the year. You want to join it. You want to make it, right? You want to be there. So most probably central banks will continue to buy gold. As of FDIs now will continue to, we'll look to this and, okay, this is an opportunity, let's buy gold as well. So the demand will increase, therefore prices will most certainly go up as well.
So you're looking at that target of 2,500.
Yep.
What, though, do you think is likely to happen when we actually get a definitive outlook from the Fed in terms of when they're going to cut, or even when they do start cutting? What's going to happen to gold, do you think?
Well, if they start cutting, that's going to be a surprise then, because the market is not expecting any more cut on June. But let's say, something happens and they actually cut. Well, then gold won't happen this trajectory that I've just mentioned, and most probably we will get a lower gold on back to 3,000, back to maybe 2,100. All of those numbers there, because that holds a big resistance and now turns off a support. If they don't cut, and if they say, look, we will maintain on hold for this and reason, most probably they will maintain on hold, because if we remember here on June of 2023, Jerome Powell stated that yes, on the economic outlook on the minutes of the FOMC, he said, yes, we do expecting a sticky inflation through 2024 plus a higher unemployment number. So this is what we're having right now. And if we continue to have this, the rhetoric that he just mentioned, he can't change it from one day to another. So he will need to maintain the rhetoric for a few months. And then after, let's say, July or maybe August, he comes and change it. Look, during to the certain times, we will maintain to hold the interest rates for a period of time. We are data dependent or blah, blah, blah. And then gold will continue to rally. I don't see gold coming down even on this scenario, only if the Fed cuts the rates when the market is not expecting.